Okay, I should be live now. Hello. Welcome to a VO's journey. My name is, and you know what? It's all can be messed up, right? Things get messed up in this business. When we try hard, things mess up. So I apologize for that. But to get back on track, hello, welcome to a VO's journey. My name is Anthony Pica. This show is all about helping the new and upcoming voiceover artist grow their business and sidestep all the crazy things that I seem to step on. Sorry about that. See, so here's the first lesson of today's stream. All right, so you don't step on it. Make sure that your mic is turned on properly. What happened was I was in my booth earlier doing some character work, and lo and behold, I didn't switch back over my mic to my broadcast or my editing station here. So what happens? I didn't have my mic on, so I apologize for that. But anyways, it's wonderful to be coming to you live today. We had a wonderful question in our Facebook group, a VO's Journey Facebook group, and I thought that it would be cool to just take a few minutes and go live and talk to you guys about it. So the question was, as a voiceover artist, should I open a sole proprietorship or should I be an LLC? Now, I think this is a great question because, as we end the year in the fourth quarter here, there's a lot of things that, we don't usually talk about, which is funny because when growing a business, the most of the things that we focus on are marketing, we focus on our quality of our sound, getting customers, all this stuff, but we hardly ever focus on the back end of the business, okay? Like the super, super important part of the business, which is the financial part, like i.e. taxes, i.e. business structure, okay? The stuff that legitimizes our business and that we have to have so that when it comes time, on April 15th, we are not stuck paying Uncle Sam a ridiculous amount of money. And I can tell you from experience now, when you start making a lot of money, it looks great coming in, but man, it hurts like hell going out. I promise you. Now listen, I believe we need to pay our taxes, but what I'm trying to say is we want to do our best to limit that amount of taxes that we have to pay. So with that being said, how you pick your business entity is very important. So the differences between sole proprietorship and LLC. So let's talk about that. All right. Sole proprietorship basically means that you are going to use basically your own social security number, and you are doing business as, and you could have your entity name, but for all intents purposes, it's you. And you're just doing, everything, all the money that comes through, you are paying all the taxes. You are paying both employment, you're paying both unemployment taxes, employment, you're paying all of the taxes that go along with the federal and the state side, meaning that when it comes time, like for example, if you work at a job for an employer, okay, they'll pay like half of the taxes. Like, so if unemployment is like 15%, they'll pay like 7.5%, and you pay 7.5%, et cetera, et cetera. But as a sole proprietor, we end up paying the full amount of all the taxes. Okay. And that's just a part of it. But from an easy standpoint of setting up a sole proprietorship, if you've started business and you're making money right now, you are a sole proprietor. Does that mean you don't need to register with your local area? No, you still need to register with the commissioner of revenue in your particular city. Okay, and you go to them and you're going to open a DBA, doing business as, and you'll put your name down and for your business, and you need to have that so you could pay local taxes, but also so that you can also get a license. Like where I live, I had to get a license to work in my house, right? Like, as this is my business. And all of this makes it's very important for us when we go to, like I said, file taxes at the end of the year and so forth. And it's very important. Also, if something was to happen to our business, like things were going to burn, like if you lost something, if there was equipment that went down and there was some sort of insurance claim, right? I think that this is, thank you. Is it My Me? I love it. Yes, the shirt. Jurassic Park. I love it. Anyways, so, if you had to make a claim or whatever, you've got to be able to show legitimacy in your business. So that's an important part to make sure you're registered with everybody. So now sole proprietorship, like I said, that's what we would generally all default as. If we go, all right, to then sign up for an LLC, okay, which you could say LLC stands for limited liability, in some senses, corporation or company, okay? But for our purposes, an LLC is an umbrella, okay, that basically we can open up, and in all respects, we are literally creating a new person. All right, you are getting a new EIN, okay, which is called an employer identification number, okay, and this is like a new social security number. So then everything that you have, like your business have or whatever, falls underneath this umbrella of the LLC. Okay, so for liability purposes and anything, it's a wonderful shelter in case something was to happen. And I know we've talked about this previously. If you were to get sued or something and you have an LLC, as long as you didn't personally sign any waiver, the person could only ever come after your business assets. They couldn't come after your house. All right, so as a sole proprietor, they can come after any assets that you own under your social security number. Whereas an LLC, it's that way. Now, us as voiceover actors, it's important for us to always make sure we're aware of what could happen to us, but I don't know of many people getting sued. I don't think I've heard of anybody, but it's good to be protected. I don't want to be the person who gets sued and not know. So anyway, so that's one thing. But just as an understanding of an LLC, when we set up an LLC, so you have to set up an LLC. In order to get an EIN, you have to go to the IRS. Okay, from the IRS, then you set up an LLC through your state. All right, through the state, the state corporation commission. Okay, so the SEC of your state. Okay, you set it up through your state. So you got to go first to the federal government, the IRS, to get an EIN. Then you go to the state to sign up for an LLC. Then when you have that documentation, then you go to your local commissioner of revenue and you go there, and that's where you fill out the forms to register your business in your city. Okay, so those are the different areas that you have to go in order to get that set up. Now, at this point, most of us, I'd say 95% of us or whatever, we are single member LLCs. So what that means is like it's almost a pass-through LLC. It's taxed very similar, if not almost the same as a sole proprietorship. Okay, under this umbrella as called a single member LLC. The differences are is you can be a corporation. You can set up a C Corp, an S Corp. You can set up these different corporation types, okay, which have different, an S Corp and a C Corp. They have different things like, for example, some of them require boards where you have to have board members and you have to have minutes, a certain amount of meetings per year and things like this as regulated by the government, okay? But because of those different things, those are taxed differently, right? And unemployment tax and all these things, FICA, all this different stuff is then passed through. So you don't end up paying as much, but right then there comes all the other stuff with you having a board and you have to file minutes, and it could be a lot of other stuff. It doesn't make a lot of sense for people like us who are just working by ourselves. Okay, as you start making more money, it might be beneficial to look into an S Corp down the road. But most people who sign up for an LLC will sign up for a single member LLC. Now this is important. All right, if you have stuck around this long and you were like, oh my God, he's talking about business entities, run! This is important, okay? You have to take this seriously. We have that whole thing about imposter syndrome and, us being worried that we don't belong in this business, or, we're not, we're just not professionals. Well, I have to tell you, this stuff I'm talking about right here, this is so vital to your success. It really is. Because without these things I'm talking about right here, you're just a glorified hobby that will be cut off at the knees when it comes tax time. And then what happens is that when that happens, you'll be like, this is not worth it. I mean, I can't even make any money. I owe so much money that I don't even have now. Like, this is how could anyone make it in this country, running a small business? It's ridiculous. It's important that you do take the time to learn these things. It's so vital. So my recommendation to you, all right, is that I think in our situation, either one is fine. I personally have an LLC. Okay, it's Anthony Pica Productions LLC. I believe in LLCs, and when you have an LLC, it's easier for you to switch to the other different types as you make more money to not legitimize, but as you make more money, you can, like I said, move to those other types of corporations that will allow you to keep more money and not have to pay as much in taxes. But it's so vital also that you look into a bookkeeper, look into an accountant as you grow your business, okay? Because you need to surround yourself with professionals who know what they're doing. All right, and I can't say that enough, okay? I think it's so important. I've tried for the longest time to do the things by myself, but as my business has grown, I realized that there's just no way I can keep up with what I'm doing, all the stuff I'm doing, and make sure that every filing, every contractor I use or business I use, or everything is taken care of. I mean, that's not my specialty. I'm not an accountant. I didn't go to school for it. I don't want to be an accountant. All right. But I know the value of having one, that organization. Okay. That knowledge of what is actually happening. We talked about the importance of being specific and specific numbers and knowing your stats. All right. Key strategic indicators. Well, it boils down to how it works in finances as well. Okay. So anyways, I know this was not the sexiest talk today about how to get business and how to get work, but I thought this was a wonderful question in our Facebook group of VO's Journey, and I wanted to come on live and talk about it with you guys, and in case you had any quick questions. So if you have any questions about any of this, or questions in general about voiceover, please feel free to hop on and let me know. We've got some awesome people. I want to welcome Trevor. What's up? The man, the myth, the legend. Thank you, sir. Hello. Thanks for the information. Also, love the t-shirt. I elected sole proprietorship, and I set up a DBA, but no license yet because haven't secured VO work. I totally understand. Let's see. Nika said hi. Hello. Then Mimi says, definitely check out local state regulations for business setup. Absolutely. And that's a really good point. If you go to your local government's website, they should be able, they'll have a place on there for businesses. A lot of them have like PDF files of like how to set up your business, the step-by-step process of how you need to do, the people you need to contact, etc. Also, my recommendation is keep a form that you create that has all of your login stuff, all of your identification, so that it's easy to come across. Because by now, depending on how long you've been in this business, that we work with so many different companies, we do so many different things, it can be hard to find this information. So it's really important that we get it. Alan, fantastic. Thank you, Will, as well. You definitely want to save all your receipts. And that's true. But Alan brought up a really good thing that I forgot to talk about, which is really important. He said, how to estimate quarterly when starting out. I've never gotten a good answer on this. So first off, what Alan's talking about is and if you're not doing this, this is something that you need to pay attention to. As we, as single member LLCs or sole proprietorships, and the work that we do, we are asked to pay taxes quarterly. All right. And the idea behind this is that when you go set up for your license, right, your commissioner revenue, they will ask you, how much do you predict that you are going to make? I think this is ridiculous to me, but this is how it works. They ask you, how much do you predict you're going to make this year? Okay. Based on that prediction, they charge you, all right, and then they give you a business license, okay, for that year. They charge you based on the predictions of what you are going to make for your license, okay? That was the license, all right? They charge you. Then, based on that prediction, quarterly, you pay taxes based on your yearly prediction. Okay? And as you go through, all right, and you report what you're making with the taxes, what you do is at the end of the year, you've paid quarterly the taxes on the money that you predicted you were going to make that year. And at the end of the year, all right, when you go on to then file taxes for that, in April 15th for the previous year, okay, what you do then is you look at, you have your tax consultant say, hey, okay, well, you said you were going to make $100,000. You made $120,000. You paid taxes on $100,000. We need to make up the $20,000. So then you end up making that and you pay that. Or vice versa, you made $90,000 and you said you're going to make $100,000. So then actually you will get money back, okay, because you paid extra. All right, but that's the idea behind paying. That's a very simplified way of talking about paying quarterly. Okay, but this is vital because if you don't do this, I learned this the hard way. You can actually be charged a penalty for if you screw up in your predictions or if you make more money or less, which I think is. Anyways, I think that's so dumb that you can get penalized for screwing up a prediction. I mean, you don't know, you have to predict, but it is what it is. And then there's markers on how much you pay per go up. See, that's why the more money you make, you just pay a lot more money in taxes. Okay. But no one knows this until you get to that point where you start making money. And then they're like, the tax man's like, hey, you owe me money. But anyways, that's how the quarterly tax is. And if you're not paying that, if you've never even heard of it, you really need to dive into that, talk to a professional, work with somebody, even a bookkeeper, an accountant, a tax consultant, somebody who can help you and give you professional advice. I am none of those. So the advice I'm giving you here is just anecdotal information that I have. All right. It's not meant to, give you legal advice or anything. It's just, what I'm doing and what I'm learning and sharing it with you. I guess that covers the legality of me giving legal advice. But thank you, Alan. I hope that helps out. I don't know if that made sense on answering your question about quarterly, how you estimate quarterly. Okay. But that's how you do it from the beginning of the year. And then, by the way, the next year when you go, this is nuts too. When you go to get your business license renewed, if you messed up on your prediction too, they charge you another penalty. And then the money that was left over from last year that you didn't pay for the business license. Now I know that every locality, every place is different, but it was a shocker, especially my first year in. I had they charged me over like $1,000 for the license. Now I probably live in a more of a highly taxed place than some places, but still, I was like, and that's for first time business owners. I was like, man, that's rough for a first time business owner. So this is why what I'm trying to tell you is what happens to a lot of people is if you're not on top of these things, all of this stuff will hit you at once and it could tank your business because you might not be able to sustain, what you have to do. You might not be able to pay everything. And what you don't want to do is get behind on your taxes because no matter what, you could pretty much get out of anything in this country. But when it comes to the government and then it comes to taxes, you can't get out of that stuff. All right. And they will come after you. There's no joke. So, they will do all kinds of, anyway, we don't need to talk about that. So, cause we're not in that situation, but I hope this helped today. I hope this at least got you thinking about business structures, taxes, what you need to do financially for your business. And, this is really what legitimizes your business. This right here, making sure your business structure, making sure you are registered with the right localities and principalities you're supposed to be, that you're paying the fees and the taxes you're supposed to be paying, that you have the licenses and things that you do, that really does legitimize your business, okay? And, it will at least allow you then to grow your business the right way and not get stuck with a massive tab down the road that you never saw coming. Okay, well, thank you guys so much for watching. Thank you for you brave souls who stuck around. Do you have any other quick questions real quick before we head out? Just remember, it's not illegal to owe taxes. It is illegal to not file. Thank you so much, Will. So even if you have a bill you have no idea how to pay, file it, then set up payment plan. Thank you, Will. That's a great, yes, absolutely. There's payment plans. Yes, absolutely. And Will is absolutely right. Make sure you just don't ignore it. That's what you don't want to do. Don't stick it under the mattress. Make sure you file, set up a plan. Absolutely, Will. Thank you for that. All right, you guys, thank you so much for watching. I appreciate it. Make sure you like, subscribe, and I will see you tomorrow. All right, goodbye.